We've had a couple of, I guess, middling upgrade cycles. Why do you think that the AI technology incorporated here, we heard about it about a month ago,
Sure.
Is actually going to move the needle?
Sure. So if we look back in time, there has been no other time in history that Apple's installed base has been as large, that replacement cycles have been as long, and where Apple has forced you to upgrade your phone to get such a new and kind of pervasive technology at the same time. So you put all three of those together and you say there's a clear catalyst and only 8% of iPhones and iPads can actually run Apple Intelligence today. It's clear that Apple will try to add more utility value to your phone in introducing Apple Intelligence. Almost certainly the product will just get better over time. And ultimately, there's over 1 billion devices that need to be refreshed to get to get this technology. That's what we think, at its simplest form, drives the upgrade cycle.
So it's not necessary, I guess, by the way you put it out there, that today a preponderance of people feel it's immediately necessary to have this technology, but that it will build in that direction. So that's why it seems like you're fixing the price target, the valuation on fiscal 2026.
Correct.
Numbers.
Yep, and that's exactly right. So if we think about it, Apple Intelligence will launch sometime later this fall. It's only available in U.S. English. About 30% of the iPhone installed base is in North America. And so there is a cohort that can upgrade this fall that can get Apple Intelligence, but ultimately 70% of the world doesn't have access to it. In countries like China, you'll need a local cloud partner, right? So there's still language broadening that needs to happen, third-party API integration that needs to happen. We think that can progress over the course of the year, such that in fiscal 25, we have Apple doing 235 million shipments, very slightly above consensus. But in fiscal year 26, that becomes the big year, 262 million shipments. I'd also add that we think with the iPhone 17, which would drive fiscal 26 numbers, we think you get a bit of a form factor change. We think you get a slim model. We think that actually becomes an incremental reason to upgrade as well.
Does this change the mix in terms of services versus hardware and all the multiple implications for that? Because even with this fairly aggressive above consensus idea of what revenue and earnings can be in fiscal 26, it's the 30 times multiple on top of that for your price target.
Sure. So there's two ways that I would describe it. First is product revenue is going to grow faster than we've had it growing over the last 2 years. That is clear, right? Double-digit growth versus relatively benign growth. So at the end of the day, the mix shift to services won't be as strong as it's been over the last 2 years, but we still have services outgrowing product, and therefore you still do get this positive mix shift, such that by 2026, 40% of gross profit dollars from Apple come from the services business. It's about 36% today. We then say, historically, there's a very clear correlation between services gross profit dollar mix and valuation multiple. So there's a reason to say, even with this cycle, which in and of itself to me is multiple enhancing, if services is growing faster, becoming more of mix, that is still a tailwind to the multiple, albeit earnings revisions still have to drive the majority of this story.
Yeah, I was going to say, I wonder what the main pushback you might get if it is just on valuation. I mean, even with meeting your revenue estimates for fiscal 26, I think the 5-year annualized revenue growth is only going to be 5 or 6%. Right?
Yep. And that is how, that is ultimately how Apple trades over time, which is, I think we have to be cognizant there are typically 4-year cycles here, or at least that's what we've seen historically, the first two being very strong, the third one mediocre, and the fourth up to that cycle, depends. And this year we are entering into this 2-year up cycle. If you go back to 2021 with the 5G iPhone 12 cycle, Apple peaked at about 32 times earnings. That was when the exuberance behind the 5G iPhone cycle was growing. We think the same thing can happen. So my price target is 31 times multiple. Again, a turn discount relatively in line with the historical peak, but you do have services mix as a percentage of gross profit dollars higher today than you did back in 2021. That helps to support that call.
Is there a longer term issue? I mean, you have the industry investing hundreds of billions of dollars in capital in physical infrastructure to do whatever AI is capable of doing.
Yep.
Is there any risk that it, in some respect, displaces either the iPhone as a central, vehicle for a lot of this stuff or something else?
So today, not yet. There have been some, let's call it early use cases or early tests on other devices outside of an iPhone that haven't really come to fruition. The iPhone and the smartphone more broadly is still kind of your key compute device. Now, I think Apple actually has one of the most brilliant strategies that, with the hindsight of 2020, is fair, but we can look back and say Apple is trying to take a very narrow approach to generative AI, provide better insights and better functionality for what Apple can control on the device, but then ultimately try to integrate the best foundation and best multimodal models possible and distribute it to your customer base for free. Yeah. So we all that own an iPhone, it's almost a bit of a capital light approach in which Apple's CapEx is $10 billion. Sure. You know, the rest of the big cloud compute companies spend $150 billion plus a year, but Apple is actually distributing those platforms for free. And so, or at least we perceive to be for free. So it's a very powerful strategy to me that keeps the iPhone and the smartphone as your kind of core compute device for the years to come, where people innovate. It's going to be exciting as an analyst, but we don't see it yet.